Welcome to the Stocks channel. My name is Cory and this is your daily stock market update. Please remember to smash that like button, and if you're new, go ahead and subscribe to the channel. First, we're gonna take a look at the SP 500. So let's crack open this chart and see what's going on in the stock market today. All right. So with the S&P SPY ETF close today, we see that we're up 0.55%, and we did get a bullish price action close above the 5 EMA. So the bullish trend is still intact because we have that 5 EMA still trading above that 13 EMA, and the medium-term bull trend is still strong because we still have a strongly sloping upward 20 simple moving average. So while the bulls have been MIA for a few days, it looks like they're finally coming back, and they're making somewhat of an initial move in a big way, closing back above that 5 EMA. So now we have bullish price action to go with bullish trending, and I'm expecting this trend to continue to strengthen as we go up from here. And we did find support again around that $341 level, and also bouncing off of that 20 simple moving average, which is now around the same exact level. So the bulls hung in there long enough to find support, and it looks like we're going to continue to bounce from here and continue to head higher. So look for a break above this resistance trend line tomorrow, which is right around a SPY level of $345. And once we get a close above there, the bulls should step back in a big way and drive us back up to our price targets of $350. If we break 350, our next level is $355. So there's really not much else to talk about on the SPY ETF. The bulls look like they're back, and we're looking for higher price targets soon. Next up is the Nasdaq 100, and we're looking at the QQQ ETF, and the Nasdaq 100 closed exactly flat today, going absolutely nowhere. Now we're still trading above that 20 simple moving average and the 0.382 Fibonacci retracement level at $283. So it's still hanging in there, and we're still building a base for the bulls to build on. Remember, if we go to that 1 hour chart, we are building a bullish flag, and we still have this nice flag channel that we're trading down in, and we have this flagpole here. So it's likely that the bulls are waiting for a breakout of this resistance trend line right around $286, and we should see a resumption of that bullish trend. So going back to the daily chart, we are holding up above very important support levels, and as long as the bulls can hold up above support, we still have the benefit of a bullish trend short term and medium term. The 5 EMA is still trading above the 13 EMA, and the 20 simple moving average is still sloping upward. So the bulls have energy to build on, and the trend is your friend. As long as the trend is going upward, the bulls want to be buying off of these support levels, so look for the price action to start heading higher soon. Next up is the DOW Jones Industrial, and this is the DIA ETF, and we see the Dow Jones also has bullish price action closing back above the 5 EMA. The 5 EMA is still trading above the 13 EMA, and the 20 simple moving average is still sloping aggressively to the upside. So on the Dow Jones, we're looking for a break of the trend line right around 286, and our price target is just above that at $289. If we can break that price target, look out for the resistance trend line at 291, and our next price target above that is 292. So right now it looks like the bulls are stepping back in, and they're still fully in control. As long as we can keep the 5 EMA trading above the 13 EMA, we're going to maintain that short-term bullish trend. Now the short-term bullish trend means we're likely to continue to trend higher, and little by little we should continue to grind higher as long as we have that bullish trend intact. You can see that bullish trend across all three indices, so overall the stock market is still looking good even after that pullback and that correction. Next up, let's take a look at the VIX, which is our fear indicator, and we see the VIX still failing to close above that 29.6 level, even though it keeps getting above that level intraday. However, closing prices matter way more than intraday price action, and we could see the VIX closing below the 5 EMA today. So if the VIX can't get a close above 29.6, we're likely going to see the VIX start to bleed out back towards our 23.5 level. And if the VIX is heading lower, we expect to see the stock market head higher. The VIX is a direct relationship with how much fear is in the market. So if we see the VIX going lower, that means fear is leaving this market, and we're likely to see more people stepping in. Remember, there's still a lot of people on the sideline in cash, and that only means there's more buyers just waiting for an opportunity to buy in. So after a correction like we've had and the VIX heading lower, it's likely we're going to see more volume, and we're going to see higher prices soon. Next up is the financial sector, and we see financials going up in a big way today, closing up 2%. You can see the bullish trend is strengthening, and the 5 EMA is starting to create separation from the 13 EMA, and that 20 simple moving average is starting to aggressively close above the 50 EMA, and it's gaining a positive slope upward trend. So that medium term bullish trend is picking up financials, and with a bullish candle like this taking out all of the previous highs, We're likely to see a new higher high on the daily chart very soon with a close above 25.52. So financials are looking bullish, which makes us more bullish on the S&P 500. Next up is the industrials, and we see industrials also looking bullish, closing back above that 5 EMA and maintaining that strong bullish trend. You can see how bullish the industrials are because all of these moving averages have created separation from each other, which means we're in a strong upward bullish trend. When we're in a strong upward bullish trend, we want to be buyers off support levels, and that's exactly what the bulls did today with the industrials closing up 0.82% higher. So I'm looking for industrials to continue to go higher, and our next price target on the industrials is $83. Next up is the healthcare sector, and we did see healthcare in trouble yesterday, but that trouble has now been remedied with today's close over 1.5% to the upside. That 5 EMA is trending back above the 13, and our 20 simple moving average is still trending upward. Our price action is above all the moving averages, and it looks like the healthcare bulls are back in a big way, and we're looking for healthcare to continue to head higher. So all three of these sectors are looking bullish, and if all the sectors are bullish, we expect to see the S&P 500 continue to go higher. Next up is the US dollar, and we see the dollar going up 0.3% today, but still in a very bearish trend. Remember, if the dollar's getting weaker, we expect to see asset prices continue to inflate, which is bullish for the stock market. So right now, I'm not expecting the dollar to go back into a bull market anytime soon because you can see we have bearish trending and bearish price action. The 20 simple moving average is trending downward, and we have a short-term and a medium-term bearish trend. If we zoom out here, you can also see that we're in a long-term bearish trend. So there's nothing bullish about the dollar right now, which makes us more bullish on the stock market. Next up is gold, and we see gold giving back a lot of its gains that it had yesterday and still closing back above our support trend line. So remember, if you're a buyer of gold, you want to set your stop loss below this trend line because you're less likely to get stopped out if you do that. Right now, we need to see gold break back above 1900, and we really need a true test of support and a balance to know that gold is going to go back into that bull market. So right now, it looks like a good time to accumulate gold, but it's still too soon to say because we really need a breakout and a test of support and then a continuation of that trend with a higher high. We failed to make that higher high a few days ago, and we really need to close above 1930 to let the bulls really start running. Next up is silver, and we don't normally cover silver, but we'll do it today, and we see silver is still stuck below resistance right around that $25 level. So it looks like silver's still in a consolidation, and we need to see silver break out of this $25 level. And if we break out of 25 and we can come down and test that, that would be a sign to become a silver bull as well. Now I think silver is going to follow gold, so if gold gets bullish, you could buy silver or gold. It's really up to you as the investor. Next up is Apple, our market moving stock, and we see Apple going down 0.96% today, which is not great for our market moving stock, but it is still trading above the 50 EMA. Unfortunately, that is a close below the 20 simple moving average, and you can see if we zoom in here that the 5 EMA is starting to cross below the 13 EMA. So the bulls need to step in a big way very soon, and if we break down below the 50 EMA and or our support trend line, that is going to be a bearish sign for Apple. So we need to wait and watch on Apple, and we need to make sure that Apple can hold up above support and get a bounce before we want to get too bullish on Apple. Next up is Tesla, and we see Tesla giving back a lot of its gains after earnings and closing down lower than its close for the day. Tesla still went up 0.75% today, but it's still trading in a very bearish price action, closing below all of the moving averages, but it is still holding up above our support trend line. Remember, the 0.382 Fibonacci level is a very important support level, and that's right around $422 on Tesla. So the Tesla bulls really need to step in soon, and we need to start getting a bounce. And if we could bounce from here, we could get another test of the previous all-time high at $503. If we start breaking below support and closing below 422, that will be a bearish sign, and I would not want to hold Tesla if we start to go into a bear market. Next up is Bitcoin, and it feels really good right now to be a Bitcoin bull because Bitcoin is now closing above $13,000. So it looks like Bitcoin is heading right for our price target at $14,000, and ever since we got a break of that $11,000 level, the Bitcoin bulls have been stepping in a huge way, and we could see a lot of volume coming in on Bitcoin. So as we know with Bitcoin, it can go parabolic and it can start going up in a straight line very quickly as the FOMOers start jumping in. So if you have not already bought Bitcoin, I don't recommend chasing it, but our price target is around $14,000, and I would expect to see some consolidation and some cooling off once we get there. So congratulations to the Bitcoin bulls, and congratulations to everybody who was accumulating and was patient, because this move is really making it all worth it. So to conclude, we see bullish sectors all around. We see financials, industrials, and healthcare looking bullish, which is bullish for the S&P 500. So look for the S&P 500 to break this resistance trend line very soon and start heading to our next price targets of $350 and $355. Now, once we get to those price targets, we'll have to talk about a very important resistance level, which is that purple and magenta trend line, as you know, has been very strong resistance. But right now, let's just trade with what's in front of us, and let's take the trade for what it's giving us. And that's telling us that we're likely to head higher and we're likely to hit our price targets. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you're new to the channel, go ahead and subscribe so you can follow along with all of our daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.